Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network. Cattle Call now being brought to you by FNBO, the Great Big Small Bank. As Brad Koima joins us this week, back from the hunt out west, much needed vacation time for him, though anytime you go hunting is a lot of work, but much deserved time away from the office to come back. And let's do some unpacking. We had the election. We had a higher stock market taking place on a Wednesday. We have a discount to the cash going on. And let's just talk about that cash. How much work is going to have to go into getting the numbers where we want them to be this week? Let's take a look at all of that. As you heard me mention, Brad Koima. He's with Koima and Varlick out of Sioux Center, Iowa. And welcome back, Brad. It brings an interesting week. Post-election now, we can focus on new things.
Well, thanks a bunch for having me on, Susan. It's one of my favorite things to do here, obviously, is your program. And I'm not sure I deserve a vacation at all, but it was a nice time. It's always fun to be in the mountains. It's managed to harvest a nice mule deer too, so that was fun. But yeah, is anybody missing those political ads yet? I know I sure am. Gosh, it's just can't hardly listen to the radio, right? So a lot going on, and a lot of general things that frankly are above my pay grade. I mean, one of the things here, of course, that we've had is Trump's been president once, so everybody's going to go like, well, what happened the last time, right? 2016 was not a great cattle year, as you recall, but I don't think that had really anything to do with who was president. We were finally coming off of that hangover that was 2015, where the market started to break and we got behind, and we got cattle that were way too fat and way too big and lost all our leverage and blah, 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 blah. And the thing didn't get better until basically the end of 2016. I can show you my scar. And then it did get better. Okay. So, I think some of the people that, they're smarter than me, these pundits that are going to say, well, now that this person's elected, this is exactly what's going to happen. If it were that easy, I'd be surprised. I do think that, some of the, clearly what Trump has talked about with tariffs and being tough with our trade partners are significant worries, I think, particularly in my opinion, to the corn and beans and the hogs. Lesser so on the cattle. Yeah, we do export some cattle, but not the percentage, for instance, that we do in the hogs and stuff like that. So, there's a lot going on. I today, nice day. I didn't really know whether the market was going to start lower, with the idea that agriculture is going to slow down with the trade talk stuff. But obviously today's winner was the fact that the stock market was sharply higher, and we seem to follow that more than anything else. Now, don't forget, though, you take a little bit of back it up just a hair. We're way off our highs. We'd had this big bull market run. Now I've had a nice correction. We held at a good spot, right on moving average support, right on retracement level support. And now we're trying to rebuild and maybe start another leg up. I choose to be in that camp. There are some guys that are bearish, and they've got, they got a story too. But I tend to think trading at a discount to cash is still a positive thing.
You talked earlier, before we even started this program, about how much hard work was going to have to go into this cash market this week. Early predictions were saying it was going to be lower, both in the north and the south, because cattle have been bought up so quick. Is that going to be a repeat of this week, or is there the possibility we could see some higher?
We've seen, I'm going to guess, okay, I sure there's a possibility, especially if this futures market thing would stay hot like this, but the sense I get coming into the week is after being 190 for 3 weeks ish, 2 for sure, that we might not quite get there this week. I know that seems to be a popular feeling. I think part of the problem is the basis, Susan. You're looking at a December futures at 185.40. The South always brags about how they're such a big hedger. Well, if you're actually hedged and you got futures at 185 something, you might take 180, 188 or 189 because you view the basis as being attractive. So that's going to be a problem. Now, in the short term, moving cattle on a timely basis is not a problem. Okay, staying current is not a problem. And I think the futures market at a discount like that is much, much better and much, much healthier than the other way around, where you're tempted to say, hey, the feed is cheaper, I'm going to make them bigger, blah, blah, blah. Feeder cattle are too high to buy. But if you put me on the spot, I'd say steady will be all of it. And I wouldn't be at all surprised that cash might be just a little bit softer this week.
You talked about this cheap feed equals heavy weighted cattle. And that sounds like that's going to be a concern we're going to see continuing into the fall.
If you're bearish, that's probably one of the, your bullet points. Cheap feed does lead to cheaper cattle. There's historical, proof of that. Now, if that was the only thing that affected cattle prices, wouldn't that be an easy thing for an analyst to look at? I actually, as I referenced in trying to answer that last question, when people are willing sellers, that's where we are now. We're a long ways from the other side of that, where, the average weights are big. The grade is not. Some of that's how we feed cattle, or how some of you guys are feeding cattle. I just feel like that this yearling crop of cattle that were bought as yearlings, cattle that will be sold, say, into December, January, February, March, in that first quarter, they were high priced. I have some. I think if we can get those cattle marketed, we're going to say, phew, let's get rid of them, because I was afraid they were going to lose money from the day I bought them. So I don't sense that, but certainly I think whether we stay current or not is going to be the macro fundamental. That's going to be the most important thing here to watch next year as we move on to move along into the early spring and summer. So, but in the near term, I just don't think there's enough cattle to go around. I think Packers making money. I think the demand has been good. I think that there's, if people look at it and say, hey, we've got a election that maybe gives us a little more confidence in the ability of this economy to spring back a little quicker than it might have otherwise, then I think that the everything moves along smoothly here. So I still think we've got some leverage. Let's keep it that way.
And as I saw a thing on social media the other day, it was a turkey holding a sign that said "Eat beef" for Thanksgiving. So let's hope there's some good beef, strong movement.
Yeah, don't forget, for one day there, we're not gonna, whatever. Yeah, I don't view that as being a significant problem at all. Let's, the next thing you'll start talking about is whether the weather gets a little bit worse again. So no, it's all good.
Don't be talking that. What's the best way for folks to get a hold of you, Brad?
Look us up at kkvtrading.com or 712-722-0023 is the telephone number.
All right. That's been another edition of Cattle Call. Quick reminder, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's a Cattle Call being brought to you by FNBO, the great big small bank, right here on the Rural Radio Network.